Welcome to the Way of Wealth. I'm Corey.
And I'm Lily.
Today we're going to talk about a guy who's really popular online named Bo Polny. He has a huge following on YouTube and specializes in predicting gold and silver prices and financial market movements.
I've heard that name. Seems like a lot of people are talking about him.
Yeah, I first noticed his channel about 5 years ago. He calls himself a biblical cycle timing expert and uses numbers from the Bible to predict markets.
Biblical numbers? That sounds pretty unique.
He uses combinations like 7 plus 7 plus 7 and what he calls God's dates to predict turning points in financial markets. I thought it was interesting at first, so I followed his channel for a few weeks.
So how'd that work out? Was he accurate?
That's exactly the point. I noticed that many of his predictions were wrong, especially the short-term ones. For example, he'd predict a major crash in a certain month, and then nothing would happen. What's even more interesting is that he deletes the videos where his predictions failed.
He deletes them? That doesn't seem very honest.
Right. So if you only watch the videos that remain on his channel, you'd think he got everything right. But in reality, the failed predictions have all been removed. And he has this other characteristic. He's a master of hindsight.
What do you mean?
After a financial event happens, he starts using all kinds of different biblical number calculations to align with the date of that event, and then says, this is the timeline God wrote in the Bible.
So the event comes first, then he finds numbers to match it?
Exactly. That's not prediction, that's retrofitting. Real prediction should be stated clearly before the event happens, not forcing numbers to fit after the fact.
If his prediction method and accuracy have so many problems, why are we talking about him today?
That's a really good question. Because he created a slogan that hits on a core truth. He says, the entire financial system is a total fraud. This phrase is simple, direct, easy to understand, and more ordinary people are starting to recognize this truth.
But isn't that statement too extreme?
It sounds extreme, but if you think carefully about the logic behind it, you'll find it's not an exaggeration. The core concept of this statement is that governments can print money out of thin air.
That sounds a lot like Robert Kiyosaki.
Exactly the same. Kiyosaki has been saying all along that when governments can create currency without limits, the entire financial game is rigged. This isn't a conspiracy theory. This is fact.
So, even though Bo Polny's prediction method is problematic, the statement itself is correct.
Precisely. We don't need to agree with his biblical numerology prediction method, and we don't need to believe his short-term market predictions. But this statement, the financial system is a fraud. This is the core truth we should explore in depth.
So, specifically, how does this fraudulent system work?
Let me start with the basics. When a country's central bank can create money out of thin air, what happens?
More money exists, but the same amount of stuff exists. So prices go up?
Right. That's the essence of inflation. But that's just the surface. The deeper issue is that this creates a structural dependency. Governments discover that printing money can solve a lot of problems. Need to stimulate the economy? Print. Need to bail out banks? Print. Need to pay for welfare? Print.
Sounds pretty convenient.
Too convenient, so they can't stop. We mentioned a term in previous episodes called financial addiction.
Right. Like drug addiction, the more you use, the more addicted you become.
Exactly. At first, it might be just small amounts of printing, then it becomes quantitative easing, and then it becomes unlimited quantitative easing. During the 2008 financial crisis, the Federal Reserve printed several $1 trillion. By the time COVID hit in 2020, they printed over $5 trillion directly.
That number is really staggering.
And this isn't just an American problem. The European Central Bank, Bank of Japan, Bank of England, all the major central banks around the world are doing the same thing. This is why Bo Polny says the entire financial system is a fraud, because the foundation of this system is built on the ability to print unlimited money.
So why is everyone still using this system?
Because most people don't have a choice. Your salary is paid in fiat currency, your savings are denominated in fiat currency, you buy things with fiat currency. The entire economic system is tied to this printing press.
So even if you know it's a fraudulent system, you can only keep playing the game?
For daily life? Yes. But the key is, you don't need to keep all your wealth inside this fraudulent system. This brings up another important concept. which is the fundamental difference between Keynesian theory and the Austrian school.
What's the difference between these two schools?
Keynesian theory believes that governments should actively intervene in the economy, stimulating demand through fiscal policy and monetary policy. Simply put, when the economy is bad, print money, lower interest rates, expand government spending.
Sounds like the financial addiction we just talked about?
Exactly right. The Austrian school, on the other hand, believes that this kind of artificial intervention distorts market price signals, creates asset bubbles, and ultimately leads to more severe economic crises. They advocate letting markets operate freely and governments not printing money recklessly.
So which approach does the world use now?
The vast majority of countries use the Keynesian approach. This is why we see global debt continuing to soar, money supply constantly expanding, and asset prices increasingly disconnected from reality.
So when Bo Polny says the financial system is a fraud, he's actually criticizing the Keynesian system.
You could understand it that way. When the entire system relies on continuous credit expansion and currency oversupply to maintain operations, that's not a healthy financial system. It's a Ponzi scheme.
Ponzi scheme? That's a serious statement.
But think about it. What are the characteristics of a Ponzi scheme? Using new investors' money to pay returns to old investors. How do governments pay off debt now? Issue new debt to pay old debt. U.S. National debt is already close to $40 trillion, and the interest alone costs over $1 trillion per year. Where does that interest come from? Print money or issue more new debt.
When you put it that way, it really does sound like a Ponzi scheme.
And this fraud is accelerating. In 2000, U.S. national debt was about $5 trillion. 26 years later today, it's close to $40 trillion. It's grown almost 8 times.
That pace is terrifying.
What's more terrifying is that this pace is accelerating. Going from 30 trillion to 40 trillion took less than 5 years. This is the final stage of financial addiction. The dosage gets bigger and bigger, the frequency gets more and more intense.
So when will this system collapse?
That's the key question. We don't know the exact timing. Bo Polny doesn't know. Nobody knows. But what we do know is that this system can't continue forever.
Why not?
Because eventually, there will be a loss of confidence. When more and more people realize that the paper money in their hands is just a promise printed by the government's printing press, and the purchasing power of this promise is constantly being diluted, confidence will shake.
Corey, do you mean allocating physical gold and silver?
Yes. This is why we keep emphasizing, if you can't touch it, you don't really own it. Paper money can be printed infinitely, but gold and silver cannot.
This reminds me of a recent listener comment. He said he bought some gold when it was $1,500, but after holding it for a few years, without much appreciation, he sold it. Now, with gold at over $4,000, he really can't bring himself to buy.
This is a very typical psychology. Let me ask you, and let that listener ask himself, do you believe inflation will stop?
From our discussion about financial addiction, it probably won't stop.
Right. So the second question, do you believe your money will continue to maintain the same purchasing power?
If inflation doesn't stop, purchasing power will continue to be diluted.
Exactly. So, the third question, and this is the most crucial question, do you believe that all the governments in the world will suddenly have an awakening, recognize that they can't keep printing money, and then stop printing?
That's a good question. If they really would stop, then the financial addiction we mentioned earlier wouldn't exist.
You see, if the answer to all 3 questions is no, then gold's price can only go in one direction up.
So it's not that gold is rising, it's that fiat currency is devaluing.
To be precise, it's both. Gold itself, as a scarce resource, sees increased demand when global uncertainty increases. But more importantly, the purchasing power of fiat currency is continuously declining.
So for that listener who sold gold at $1,500 and can't bring himself to buy it over $4,000 now, what would you recommend?
I would say, don't think about this in terms of price. Think about it in terms of purchasing power. When you bought gold at $1,500, you used the fiat purchasing power of that time. Now gold is over $4,000. It looks high, but how much has the purchasing power of the fiat currency in your hand been diluted?
That's an interesting perspective.
Ask those 3 questions again. Will inflation stop? Will purchasing power be maintained? Will governments stop printing money? If the answers are all no, then now is the time to allocate.
But many people worry, what if it drops after they buy?
This worry comes from treating gold as a speculative tool. If you're trying to make short-term profits from price differences, then you do need to consider timing. But if you're trying to protect your purchasing power, then timing isn't the most important factor.
So allocating physical gold is for long-term wealth preservation, not short-term speculation?
Completely correct. We keep emphasizing that allocating physical gold is not to profit in the short term, but to ensure that in the midst of future environmental turmoil, your and your family's wealth and monetary purchasing power won't be diluted by fiat currency.
So if someone is just starting to allocate now, is it too late?
Let me ask it a different way. Do you think 5 years from now, 10 years from now, the printing presses of global central banks will stop?
Following the logic of financial addiction, probably not.
Then it's not too late. Remember, we're not predicting how high the gold price will go. We're protecting purchasing power from being diluted by the fiat system.
This way of thinking really requires a shift.
Right. Many people see gold go from 1,500 to 4,000 and think it's risen a lot. But if you look at how much money the Federal Reserve printed during that time, you'll find that gold's appreciation hasn't even kept pace with the money printing.
So from this perspective, gold is actually still undervalued?
If you look at the growth rate of money supply, yes. Of course, we're not making price predictions, we're looking at trends. And this trend is very clear. Fiat purchasing power continues to decline. Real asset value continues to rise. This is a long-term structural trend.
Going back to Bo Polny, although his prediction method is problematic, this statement, the entire financial system is a fraud, really does identify the core issue.
Right. This is why more and more people are starting to wake up. They realize that the rules of this game are rigged. Governments can print money. Central banks can lower interest rates. Banks can create credit through fractional reserve systems. The entire system is built on the foundation of constantly expanding money supply.
So what we can do is try to move our wealth out of this system.
Move part of it out. You still need fiat currency for daily life, but you don't need to keep all your wealth in digital accounts at the bank.
So that's where the concept of the wealth emergency kit comes from?
Exactly. The first layer is physical gold and silver. This is your wealth insurance. The second layer is defensive cash, used to handle short-term liquidity needs.
And both layers need to be touchable.
Right. If you can't touch it, you don't really own it. This statement becomes very important during financial crises.
Corey, the more I listen, the more I feel that Bo Polny's statement, although simple, has really deep meaning behind it.
Right. This is why we're talking about this today. Not to recommend his prediction method, but to use this statement to remind everyone to recognize the true nature of this financial system.
So for listeners who are still on the fence, what do you recommend?
Don't hesitate anymore. Ask yourself those 3 questions. Will inflation stop? Will purchasing power be maintained? Will governments stop printing money? If the answers are all no, then you know what you need to do.
Start allocating physical gold and silver.
Right. And remember, this isn't speculation. This is insurance. This is protecting the purchasing power of you and your family during future financial turmoil.
I think a lot of people need to hear this concept.
This is also why Bo Polny's statement resonates so much, because more and more people are starting to realize that this system has fundamental problems. And when the system has problems, only real assets that you can actually touch can protect you.
And physical gold and silver are one of the answers to this problem.
Right. We plan, heaven decides. What we can do is deploy ahead of time and protect the wealth of ourselves and our families.
Today's episode was really enlightening.
I hope it helps listeners who are still on the fence. Remember, don't think in terms of price. Think in terms of purchasing power and long-term trends. Bye.
Bye.